How you guys doing today? My name's Evan. This is Fifth Year Trading. If you're new here, what's up, new kid? You good? All right, as long as you're all right. All those who are coming back to me for a second, third, 10th, 15th time, I appreciate you guys coming back. Thank you so much. Hello and welcome again. Today is April 29th, Thursday. See that? Didn't check the date. Let's go. We're learning. If you're new here, I'm gonna show you technical analysis, all the great things that come with it, and then go about it. I'm gonna show you supports, resistances, trend lines, patterns, volume profile, EMA lines, RSI, stochastic, and vortex. These 9 things is what I focus. If you use VWAP, great. Go ahead. If you use anything else like SMA lines, great. Go ahead. That's great. I don't want you guys to copy what I do. I want you guys to take my style, the things that I do that you guys do like, take them, boop, 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 apply them in your own trading. I use a 180-day time frame almost exclusively. If you day trade, great. Knock yourself out. I'm all here for it. If you enjoy this kind of content, if you enjoy a guy in sick floral shirts from Target screaming about stocks all day, like, subscribe, hit the bell notification. It does mean a lot. The more subs that I get, the more folks see this kind of videos. If you find value in this, it's not exclusionary. It's not rivalrous. What I mean, if you watch it, doesn't matter. Someone else can watch it, right? There's no taking from anyone else. The more that you enjoy it, the more you can share it, the more you like and subscribe and comment, the more folks are gonna see it, and just the better. Next is that I do have a Discord channel. There's no point joining until May 2nd. There's some folks who are joining, and to you, appreciate you. But if you get charged twice, let me know. I don't want you guys getting charged twice. I'm not that kind of guy. I'll refund you for at least one of the months. But yeah, the billing cycle starts May 1st. If you join now, you may get charged for April. I don't want that to happen. So in the meantime, the 7-day trial is still very much on, still very much alive. I get 4 or 5 folks today saying they want to join, check it out. Cool. If you like it, you want to continue, great. We'll talk about that. If you don't like it, great. You know, it's not for everybody. I do a lot of great stuff on there. If you do like it, great. If not, also great. I want you guys to be happy, healthy, learning, and secure. That's the goal. Lastly, I say this a lot. I am so good at this. For real. No, I'm really good at swing trading. When it comes to 3 to 10 to 15 day holds, I'm really good. I don't think there's many folks on YouTube who are better than me at 9 to 5 trading styles, because no one else really does that. That's not the market. The market's day trading and options, and like watching some dude sweat his ass off trying to get a bunch of money off an option call. Not me. If you like to have money work for you quicker than long-term investment, but a little bit longer than day trading, I'm probably your best bet. I don't know if there's many other folks who do this the way that I do it, or as well as I do it. But that being said, there's so many more talented people out there, right? There's plenty of folks who do great day trading, great options trading. There's that guy who has a similar haircut to me with glasses, who has a better camera than me. Adam or something, fantastic. Zip Charlie has some good new stuff, fantastic. Rick Gutierrez, fantastic. Rainer Tao, fantastic. I mean, there's no reason that should be the one person you watch. That should be part of, if not a minority group of the folks you watch. There should be 5, 6, 7. Be reading books all the time. You know, Rich Dad Poor Dad's great. Millionaire Next Door. The employee, well, let's say just employee, small business owner, big business owner, investor book, you know, from the guy who wrote the other books too. Do it. That should not be the only one. That should be part of the education program, right? When you go to school and college, do you have one professor? No. So same with this. Diversify. Even with your stocks, diversify. With education, diversify. Your job opportunities, diversify. The meals at nighttime you eat, diversify. So if you enjoy this kind of content, like, subscribe, hit the bell notification. Otherwise, I have 8 great stocks for you today. With no further ado, let's get into it. So today we have 8 tickers. I think I've called 1 or 2 of these before. I think CREE I did a while ago. But we have 8 brand new ones. I really like to keep it fresh, especially with earnings coming. There's gonna be some issue with calling only financial plays with earnings coming on, and then tech's coming, and then you have big caps doing their thing. So I mean, you gotta switch it up, and I think that it's really important for me to go find new plays and not call the same ones. So here's some brand new ones for you. I think it's gonna be a really good day. So first is AVDL. So you're probably thinking, where are the lines? If you're new here, you're probably thinking that old people know this joke every single day, but where are the lines? You know, like, where's the beef? We're going to do our supports first. There's an obvious support in this area. I didn't put it here because of that. I'm putting it because of these over here. You know, a big gap down, support here, supports here. You know, this is definitely support area. Keyword area, not a line. I don't think in lines, I think in areas, but I can take all day to draw areas for everything, right? So this is a good support area, a good resistance area. Our first one would probably be somewhere around here. That's a fair place. I think this is a good spot. Now you can put it up here and be just fine, but again, I'm not lying to myself. I don't have to force lines into where they don't belong. If I think there's a resistance that's closer than it is farther, I'm going to put it. We have an obvious trend up, so the best place to find it, you can start at the bottom here and come over and come up. And you can see it broke it a little bit. Okay, that's a little bit concerning, but your angle might have been wrong. There's also a spot right here with this little white boy here, this little white neutral candle. Come over and see that this also works just fine, and it's a little bit better, a little bit safer given the action. Now you can make this as big as you want. I'm gonna make it the size of this white candle. Boom, about the same size as that. You know, shift it up or down a little bit. That's totally fine. It ain't gotta be perfect. These are never perfect. I make my trend lines a channel in golden. That way I have more room to work with. I'm on high alert when it hits the top. I'm at best value buying when it's at the bottom in theory, right? I capture more moves by doing this. Last thing we want to do before we look at the volume profile is put our resistance trend line on top. We can see we have one just about here. It looks like a good broadening wedge that cut through some stuff. You can come over here and do it. Okay, but you can see this is definitely a form of a broadening wedge. I'm going to do it like this, once, twice. You know, it wicks 3 times. Now it's a bit of a stretch, but we get the idea, right? We all know that this is definitely broadening out. What this means is that if this next price action, it would take months, if this does not get up here, this pattern is now done, and we're going to be looking for a new trend line from resistance. Right now it's look like this. That would be the next trend line we want to see play out. We got to break above this resistance trend line and keep moving, but for now this is the major one we're going to be watching. Lastly, let's turn on our volume profile indicator, and you're going to see these 2 yellow lines. Everything in between these 2 yellow lines is where 70% of the action happens. While you're inside these 2 yellow lines, what we are seeing is the majority of volume. It's not here nor there. You can play that as, oh, this is support, that's a resistance. Sure, sometimes it acts like that, but the second you start saying every ticker acts the same with volume profile, you're being incorrect. You want more about that, look at my volume profile video. It's actually the most popular one because folks are intrigued at how I use it because I'm big brain. Last is the POC, this red line here. This is where most of the volume happens at the top little node, but it's also very gravitational. The farther away you are, the weaker it's going to be, but it always wants to pull you closer like a planet, right? If you get farther away from it, it gets weaker, but as you get closer, it gets more and more strong. Because folks can see that most action comes down here, most volume's down here. Folks agree this is probably the most fair price in theory. So that's all the lines. The last thing we're going to do is add our incorrectly. Gonna add our ticker, so when I do a photo later, I do not lose it. Boom, bang, bing, ain't no mother trucking thing. So what we're looking at with AVDL, the clear thing is this, a downward sloping trend line. Now this is the harder one to judge because you're supposed to go from the top one like this and come down. And you can see that this actually does work out fairly well because I broke it and then wrote it down, but it's not really giving us much hope here as like a design of like where you want to break above. This is probably a more fine line for a triangle, but again, it's a bit more aggressive. So, you know, it doesn't always have to fit. You know, the shoe doesn't always fit. It's kind of a harder one to read. All we need to know is that we have to eventually break this downtrend. Your line can be where you want it to be, and I can draw it until I have more clarity in a few days. AVDL, great trend line up. Beautiful. Great support right here. I would think you can probably get down maybe 2 or 3%, and you're probably thinking that's not that big of a deal. It is. It really is. If you think that 2 or 3% means nothing, you should not be trading. It's always risk versus reward. The closer to support and value that I can get with confidence that's going to hold and without missing the move, the better. The second you get sloppy, the second you should stop trading. Honestly, you got to make sure you're keen and you're very aware of what's going on. So I think if we were to get down to the support, maybe it drops another 2 or 3%, anywhere around like 760, 770, you know, that's probably fine. So anywhere in here, our first reward hits about 6.5% to our first resistance. I don't think that's going to be very strong. I think a better one's probably a little bit higher up, maybe like over here. You know, 12%. Worst case, this all breaks down. You know, you lose 3%. You want to get lower lows. 9% is too far. So again, 3 to 1, 2 to 1 for a close one. It's a good setup. Do your fundamental research. It has earnings coming up sooner than later. But AVDL, it's a really easy read. Let's check the indicators. What's super cool about this channel, besides me, it's the same joke, but that's show business, baby. Besides me is definitely going to be that I don't look at indicators while I scan. I don't know what the RSI is doing. I don't know what the stochastic looks like. I don't. Or the vortex. No idea. Email lines. No idea. I'm going to go through all 4 of these with you live, and that way you can see what I see in my mind and what I'm looking at, and that way while we kind of break it down, you're like, oh shit, I didn't know that, and it may switch my mind up. If I see email lines that are holding it like the 200s right below it, the price action is hitting the 200 living, that may switch it from an okay to a great. And that's kind of what's really cool about this kind of channel, is I do this live with you guys. So off the bat, it has a hard time breaking the 50. Okay, this 50 looks like it's super strong. It likes to go off it. Same with the 200, it doesn't like to break above it, and you can see while it gets below both of them, see what it does. It just bounces off of it. That needs to be part of your trading strategy. Your short-term price target, short-term, not long-term like 6 months, but short-term price target needs to be based off these 2 lines. If you think you're going to go ahead and just get 935 off the bat, you're wrong. You're below both email lines. The OB resistances. Historically, it doesn't have a problem getting above it a little bit. See, it has no problem getting above it. But to think you're going to all of a sudden blast through these, wrong. I think that you could easily see maybe, 862 if you get lucky. So again, short-term, we're below both email lines. It doesn't have a problem coming back. Okay, it comes back, but don't get too ahead of yourself. Don't get too broad and too macro. Short term, lower price target. It was just -30 on the RSI and still right there. Gorgeous. Stock was low. It turned around, showed some life, and now it's kind of dying off. We gotta see it keep going. We need some confidence, or it got to come back down. My guess is going to come back down, come down one more time, and then come back up. Bulls are low. That's where you want them. You really want for a stochastic with that trade. You want the bulls to be kind of where it reverses at, so probably right about here. You want the bears to be probably right about here. If those 2 things line up, that's probably where they max out for overbought and oversold, and that's where we're at. So AVDL, it makes a lot of sense. You need to know why it sold off almost 30% the last few months, but again, it's a great setup, really easy to read. It's all about risk versus reward. And again, if you want to go in now, fantastic, but I think what's better is waiting for a better value to buy in. Now with the email lines above it, resistances, so a lower short-term price target, but money can certainly be made off AVDL. Next is CDE, and this is a bit hard to read for the fact that we have this trend line. Now I think we got rid of the trend line altogether. Super easy read. It's all like FFHL, isn't it? Look at that. Bouncing. So I think that's a really good sign. But there's definitely a form of a trend line here. Now it broke it hard, right? So we can try and adjust this. And I think at a certain point you're gonna be kind of like really trying to fit some shit that's not there. Like you can come over here and be like, well, actually it's like this. It looks pretty good. Sure, I think there's some form of a higher low across the board. But I think what's more important is the horizontal aspect of this play. It's right at the POC, which is a very strong support. It has a hard time breaking it and staying down here, right? So the real question is, can you, 1, catch a falling knife? No, you can't. And then 2, where's it going to reverse at? No idea. Who knows? No one knows. Is this going to go lower? It certainly can. It's been in the 673s. You think that this is impossible? Hell no, it can get lower. So we have lower highs across the board, some higher lows. So I'm not going to say buy it today, buy it tomorrow. This should be a concern. There should be some form of a concern what's going on here. Again, I think we have a beautiful trend line that's forming, like from here over. This is a beautiful looking trend line, really holding its own just fine. But I'm not sold on it being a trend quite yet compared to a horizontal play. Great support, great POC. Give it a day. Or if it turns around, blasts off 20% tomorrow, goes, see you nerds, and takes off this, we missed it. Sure. But I want to see this. I want to see kind of, I want to see some consolidation at the bottom here. Show a little bit of life, and then we can go into it. But CDE, good look. It's a good setup. Let's check the indicators. So what's great, and this is a fairly unknown fact, if you're checking for a triangle, especially a horizontal, ascending, it's not going to work. Descending, it's not going to work as well. A horizontal triangle on the 180-day 4-hour chart, if both EMA lines are directly in the middle of the price action, that's a fantastic sign. That's actually a triangle because it shows that they're consolidating. And off the bat, we can see where are these EMA lines? Right in the middle of the price action, showing consolidation. Now, they will act as a resistance and as a support as always, but it's a great sign that price action is in fact consolidating for a big move. Was this the big move? Possibly, but I think a bigger move would be like down here, right? Or like up here. So again, that's good to see. Under 30, great. -40, great. Right where you want them, great. CDE makes a whole lot of sense, minus losing patience. We need patience. The second you think that this is a good play just because of the deal, you're being stupid, right? I mean that lovingly. CDE needs a day or two. We got to see some consolidation and some life. Once it does, it'll be a great play. So next is CREE, and this is a fantastic sell-off again. Now, does it gap often? Not really. I've been trying to search this price action for some gaps. There's not many. I mean, there's like, like this one here almost gapped. So this is a pretty rare occurrence. We see when it gapped over here, what did it do? It got filled. When it gapped here, it got filled. When it gapped here, it got filled. And when it gapped here, it got filled. So I'm hoping that this gap right here does get filled. What can be a bit of a concern though is it gapped over here and never looked back. So I would not think that's a surefire thing, but that's great to see that it did gap down because gaps like to be filled. Secondly, we can see we have this nice baby uptrend. I wouldn't put a lot of weight into it, but it does match this. See this? How it matches the three tops? That's nice. That's a good little arithmetic rhythm you want to see where the price action does match this kind of angles. Shows some good support and some good resistances. But overall, the price action in the last, 4 or 5 months has not gone below $95. It's at 98. Now, when it gets down here, see how quick it is? Boom, quick, boom, quick, boom, quick. It goes really, really fast besides right here where it got hella violent. I don't want to see this. That's going to be hard to hold. If you're down here, you get up 10%, then you drop it the next day, going to be rough. But CREE, do your research. Why do the earnings kill it? I don't like earnings plays like this, but when it comes down perfectly into the support area, anywhere in this area is a good value because worst case it all breaks down. 6% is a lot, but if you're thinking about the reward to come back up here, talk about 22. That's almost a 4-to-1 kind of play. CREE or CREE as we call it where I'm from looks pretty good. I do like it. Let's check the indicators. So we can also see that the EMA lines are right in the middle. That shows a good amount of consolidation. Again, I like ascending plays, especially when all the indexes are ascending. Like if you're gonna go trade stocks and like you're watching Tilray or like CCIV as of recently, and it's like, wow, all these stocks are a great value. Well, if all the indexes are all the way up and they're all pushing higher, but yours isn't, should that be a concern? A little one. So I have to find uptrending stocks usually, but horizontal work just fine too. CREE is right where you want it, looking good. EMA lines, there'll be resistances, but again, they're what, 12% away. You'll take 10% any day of the week. Under 30, negative 40, where you want it. CREE again checks out, looks really good. Don't rush into it. All right, if it moves up big tomorrow, if you check the morning scanners and it's like, oh, big volume for CREE, sure, go for it. But if you don't see any big life or anything, don't rush in. Next is F or Ford. Now, the problem with Ford right now is they don't offer the dividend. And again, I talk about it occasionally, but part of Ford, and if you ever watched them, they had like 40 years of it. They suspended it because of COVID. I'm very wary to get in without the dividend, just because the dividend is like legit like 15 cents and it's like a $10 stock. So you'd get like almost 1%, like 0.1. You'd get something back in return for owning it. And over like the year to get like, almost 1% back for free. So, I mean, it's good, but I want to see that dividend back before I really invest more in Ford. This is a stretch of an uptrend. This is definitely not what I'm going off of at all, but it does show, again, that's why it's dotted there. It does show consistency. You could definitely try and fit one in here, but that's not what I do. I'm not some fucking hack who just does this. I'm just showing that there is an uptrend going on. There's definitely lower highs, though. That should be a bit of a concern. But what's good though is that the downtrending, they don't really match up. There's no real like matching of the channel. Like it's not perfect at all. So there's some form of wedging going on possibly. But what's really important is that this is a very strong support area. Is this a double bottom? Possibly. We don't get too many double bottoms on this time frame, but we do have what seems to be holding as it broke today. But it does seem to be holding fairly well. It's a wick, so I'm not taking too much into this. So it's looking pretty good. Good sell-off. I want to see some life. But Ford for a long-term hold makes a lot of sense. If we can just make it to the resistance trend line, 8%, maybe you risk, 2 or 3, it breaks everything. All right, get rid of it, move on. So not the biggest reward, but for a long-term hold, like for the next 10 years, I mean, Ford makes some sense. I mean, it goes up, it goes down. It's a dividend stock. It pays you 43 cents, 27 cents, 29 cents, and $9. You get 28 cents 4 times a year. You get almost 1/9 of your value back for free just by owning it. So again, some folks really buy this for the value, but for the dividend itself. So again, until it comes back, I'm more bearish on it, but I do like it a lot. Let's check the indicators. So one thing to note that should be a bit concern is that not big bit, is that it bounced off the 200 and it recently broke it very hard. Now, that wouldn't be overly concerning until you look at the 10-year averages, and you can see that it's been downtrending for a long period of time. Probably just because of, you know, COVID, and then Obama's plan got him out, and they, you know, they probably split a bunch of stuff. Again, it doesn't show you the full picture, but it should be a big concern how low down it is. For a short-term swing, you know, 5 or 6% seems pretty likely, but for a long-term hold, we got to get above these EMA lines. We got to get back above these. Until then, long-term, it's not going to be the greatest thing you can buy with your money. Opportunity cost dictates better things out there for sure. Below 30, you know, that's perfect. That's perfect. These are perfect. So again, I like it. I like Ford a lot. Maybe it keeps selling off if you can get in at a cheap price without the dividend, and when they bring it back, you're golden and you're set with a really good long-term investment. I think it's one that I like. I don't love, only because of opportunity cost. And no one talks about this really, but there's definitely a conversation you have to have inside your head. If you have $1,000 and you buy a stock, you're saying to yourself, this one stock that I bought is better than any other stock, and my $1,000 for my research is best here. Ford, without the dividend, will not meet that criteria. It will not, right? Because Ford, you're supposed to get in, believe in the company. You buy them for the dividend and for the value, and then it goes up a little bit with growth. But then you get the dividend. You buy, like, you know, 10,000 shares of this, and you're making almost like $2,000-3,000 a year just from holding it. So that's what you need. I like it, but like I said, dividend first. Next is IMAX, like the movies. This is a great example of broadening wedge, like AVDL. See how it's doing that? IMAX just did this too. So you can see an obvious broadening wedge, right? This is super obvious. Well, this made a move up. It didn't make it. Made a move up and didn't make it. And so by now we can probably determine that this broadening wedge resistance trend line over here is not really relevant anymore, right? This is going to keep going forever and ever. And until we do this, of a 50% move or so, 40%, this does not matter anymore. So again, no resistance trend line that's really that clear here. You could say that this was one, like this, which is also what I'm looking at. That was a great one, and what's it doing? Bouncing off of it. So sometimes your triangle plays that develop then turn into bounce plays. So this should be really, really encouraging. That it broke this downtrend, it showed life. Now it's retesting it. Now hopefully earnings doesn't fug it up completely and shit the bed, but that's nice. We can notice a nice gap up here, making a brand new trend for us. Ooh, once, twice, 3, 4, 5, 6. It's survived plenty. Great support area. And again, your support, you must draw these yourself. All right, your support may be right at the volume profile line. Maybe it's down here. That's totally fine. Mine's in this area. It's a zone. It's an area. So we have a lot of good bouncing going on. Do you trust this wick? Boop. It did this. It did this. It went boop, boop. Is that going to be the full move, or is it going to come back a little bit more? That's for you to decide. I think this is a good spot to buy. Is it the best? No. The best was this morning when I saw it. But for upward potential, 6% easy. You can cut after maybe, if it breaks this green candle, it breaks down lower, you lose 2%, and then you can buy back in. IMAX, it will be a bit of a hard entry to find, but it makes a whole lot of sense to watch this at least for the week. Let's check the indicators. So this is what's beautiful about this show, besides me, my need for a haircut, is that we have such a clear indication with the 200 main line now. This has been a great support, once, twice, 3. Now, you don't want to see it tested this quickly. You don't want to see it constantly tested. But to have this holding like this, that's a great sign of strength. But it also means that the best value will be probably closer to $20 and some change. So that's a good sign at least. It needs to break the 50. You want to wait for a 50 crossover to buy in. That's fine too. Just move all your stop losses up once you cross the 50. RSI, it's good. It reverses here a lot. Put my little line there. Look at, does it reverse around this area a lot? I'd say it does, right? It bounces off like a trend line. That's good news. Stochastic, it's really low. Starting to curl. We can get a full move. Glorious. Now we want our bulls to be about there. Bears are right there. So we want to see honestly a pullback. We want to see a little bit more of a pullback and some more red for the perfect price to buy into. But we also want to see some life. So it comes down to preference. I mean, IMAX is really good. It comes down to if you want to play a crossover with the 50, great. You want to play a value play at the 200, great. Either one's fine. We're kind of in no man's land. I would give it a day. But IMAX, a great pickup. I do like it a lot. This is a glorious setup. I think the next 3, INVA, SQM, and TPC, that's beautiful too. But IVA, INVA, and SQM have fantastic triangles forming. This is a glorious trend line. The issue is that it has to hold here for sure. That's once, twice, 3 times. I just extended over to see where it's at. But it's held 3 times, but we need to see it hold for sure. If this breaks, all this breaks, get rid of it. It's done. It didn't live, right? You can go off, if you want to go for a support play, that's fine too. But if your play is a triangle like me and it doesn't hold this, you got to get rid of it. We are at the POC, which is a very strong consolidation area. See all this action over here? Consolidate, consolidate, consolidate. Comes over here, consolidates, consolidates, and now a big old consolidation. If you were sick of the word consolidation, I'm sorry. So this is a really good place to buy into. I think perfectly would be down here at 1137, 1140. We may not see that, especially if it holds here. We'll see the indicator show. But even here, you know, a good move of 5.5% hits the trend line. Worst case, this all breaks down 3%. It's a, you know, a little less than 2 to 1 for just having a good move. If we get cheaper, 3 to 1. If it keeps running, a 1 to 1, and then you can kind of move your stop losses up. INVA, it makes a lot of sense long term as well. It's a glorious triangle. Usually you want to aim for like the high of it. So if you can come up here, make a full move, I think it could be a really good play. Let's check the indicators. So once again, this is really cool, and I keep saying this, and it's again a slipped on thing that I talk about. You see where the EMA lines are? You see how it's between both these trend lines perfectly? Again, that's a great solid consolidation. Has anyone on YouTube told you that before? No? Then subscribe, because I'm smarter than them, which is really sad looking at me. Could you imagine they wear suits, and then my dumbass comes through and teaches you more than them? That's funny. I think that's good. Great looking right there. And again, there'll be resistances. If you can't break this, doesn't matter if it's triangle or not. We got to break this, hold it, we got to break it, retest it, then take off. That's going to be the play we want to see out of here. RSI looks good. I mean, does it reverse around this area? Yep. Stochastic, it looks like it's starting to curl back. If it curls back, fantastic. We'll buy it down lower. That's fine. Bulls, we want them. Bears, we want them. Yep. Looking pretty good. INVA, I think it needs a day. I want some clarity. We're swing trading. There's absolutely no reason I should be sitting here getting my hopes up and buying after hours on a play that's basically in no man's land, right? Do I have value or crossover? Value or crossover? Your value may be different than mine, but I think it needs a day or two to see where it's going to go, and that's totally fine. Next is SQM, a glorious Chef Boyer swing special. Taste the beef. Wendy's, don't sue me. This is a glorious triangle, though. Beautiful. Now, besides this one wick, which is like, you know, how my high school grades went, you know, which is fine. And my college grades did this. But this is exactly what a triangle should look like, minus this wick, you dumb piece of shit. But this is exactly where you want it. I mean, you would want to get down 52.31. But I mean, if we're a percent 0.3, we're not going to lose sleep over that. I know at the beginning of the episode I said, hey, don't be sloppy. But like, you got to remember, this is a great support area. You can easily say there's support areas right here where it's at. I mean, this is glorious. A good run of 5%. You're like, that's not a lot of money. It breaks everything where you can lose a percent and some change. That's a 3 to 1 setup right there. SQM, we're playing for the breakout. We're playing for the longer hold. We want this to happen. We want this. This is not a triangle, obviously, but I'm going to say, let's say that's a triangle. We want this. Oh, we broke out. Oh, we retested it. See you later, nerds. And it ran off. That's what we want to see happen with SQM. Now, do I know it's going to happen? Nope. Do I think it's going to happen? Maybe. But, I mean, the PLC's above it, pulling it up. Beautiful setup. Like it a lot. Let's check the indicators. Once again, we can see that the EMA lines are where? In the middle of the triangle. Consolidation. Makes sense. You can see the 200 and the 50 will be resistances, but again, once you break above that, we'll have a nice run up, and then we can sell for short-term gains or hold for long-term gains if you are long-term bullish. After you do your due diligence, research. Don't just trust me. This is a great RSI, great stochastic, a bit confused. Again, it's confusing where it wants to go, which shows consolidation. SQM, this is one I'm more bullish on. I'd consider in the morning, if it's a good day for the indexes, to buy this one for sure. I think mostly I like a day or two to think about it, but SQM, it's a good setup. I want to get too euphoric, emotions aside, good setup. Last and most certainly not least is TPC. Now TPC gives me GTS vibes, which didn't work, but it also gives me WBA, which also did work. Oh, look at that. Kerchoo, nerd. So this gives me very similar vibes to these kinds of plays. And again, I'm not overcomplicating this. I know that some people like to find setups like CCIV, and I like to pick on these people that what shape is this? What's happening? All right, this over here. No one bought this. No one cared about this. All right, what's this shape? Downtrending? That's nice. You want to buy downtrending stock? PLTR. Oh, that's a nice looking downtrending stock. Oh, that's good. Hey, what's Tilray doing? That's a nice downtrending looking stock, right? Why would you buy that when this is uptrending and the indexes are uptrending, are uptrending? Why wouldn't you find stocks that look like that? Can someone riddle me that? Can someone who's a guru who has more followers than me explain? Can you explain to me why you would push that and not this? Idiot. So this is also, sorry about that, no one's an idiot. Love value. So this is definitely a broadening wedge that has not met its peak. So we're going to find a new pattern which looks like it's a possible forming triangle. Now we're going to see what happens. We got to see some more action. We got to see some more action, see what happens. But TPC, once, twice, 3, 4, 5. This will probably take off quickly. And look at earnings. What happened? It shit the bed. Right, earnings over here. It shit the bed. So here's earnings. Nervous unless you see this. Oh, look at before earnings. Run up. Look at earnings. Run up. So I want to see if we can get a run up to earnings. Now, if we don't have any life, don't buy it. If we don't have any value, don't buy it. But I think TPC down here, $16 and some change. Where it is, a little bit lower. Give me $16 exactly. I'm going to go in for sure. But anywhere down here, it's good because our run up's going to be nice, 7, 8, 9, 10% to our first resistance. Even here, worst case, 3%, you get out, you call it a day, you give it a shot. TPC makes a lot of sense, but earnings you must research and do due diligence for sure. Let's check the indicators. I had a hunchy hunch if the 200 was involved, and sure enough it is. We can see it breaks at occasion and it comes back, and that's what's beautiful. Now you have options. Wrong button, but how are you? You can play off a value, which I think you already have. I think value is a bit lower, in my opinion, or a crossover of the 200. We're going to see that once you get above the 200, you have a good sign of life. Once you get above the 200, you can see every time it goes over the 200, it makes some good moves. Once you get above the 200 and the 50 is where you get your big moves. Above the 200 and the 50, big move, big move, big move. So you want to wait for the 50 crossover too? Great. Look at that. Boom. Autofocus. Great. If you want to wait for the 200 crossover, that's it. Great. You want to buy in because of value? Great. It's a cool camera, right? The RSI, low, love it. Stock, low, love it. Confused, it's fighting. We're trying to get a crossover. If the green will cross over, what's most likely going to happen if green crosses over, we'll break the 200 and the 50. It'll come back down, retest, then take off. That's going to be the play right there. TPC, it makes a lot of sense once you do your due diligence, once you find out about earnings, because if this does shit the bed, I don't want you holding that bag because that'll be a big sad day for you. Don't do that. And there you guys have it. 8 great stocks, most I've never called before. We're switching it up. I think it's super important for folks who watch my channel that I throw out some new stuff that I find. I scan over 500 stocks a day on average, which probably sounds like a lot to some of you and little to a few of you. But that's kind of what I do. I find quality. I found 8 stocks out of like 600 that I like today. These are really good setups. Some due diligence. Some of these are on my watch list. I know CREE been on there for a minute, CD's been on there for a minute, and IMAX has for sure. So I've been watching this for a few days, a few weeks for sure. If you enjoy this kind of content, if you like somebody who actually cares, like legit, like tries to make folks better at trading, and then that translates to more money or translates to more confidence, that's what I want. If you enjoy that, like, subscribe, hit the bell notification. If you like cats, how many other channels have had a cat in their video every single day? And he's not chained down. He likes to be here. He likes you guys. Yes, he does. He likes the light too, right? If this is what you like in a stock trader and someone who likes to be an educator, like, subscribe, hit the bell notification. Otherwise, enjoy the 2021 NFL Draft in Cleveland. Yeah, in my city, boy. Yeah, in Cleveland. Yeah, we're in Cleveland. Yeah, Silly 216, what's up? So if you're in my city this night, enjoy the draft. I hope your team gets someone worse than my team. If you're a Steelers fan, suck up. No, I'm kidding. I'll have actually a shocking amount, a startling amount of folks who like my channel and who support me are Steelers fans. So support. Hey, okay, Steelers, because you're helping me pay these bills and feed these cats and get more service for everybody. I'll let it slide. I hope y'all get someone good too. Right? No, just kidding. Not kidding. Please, please don't leave me. No. So have a good rest of your day. We'll see you guys later. Go Browns. Have a good draft tonight. We'll see you guys later.